following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the October 2nd, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a wonderful Wednesday. Although we saw the Florida State market chop, that was out in full force yesterday. Hey, let's make sure that you and I, that we do everything we can do to have a terrific Thursday. And, of course, one of the best ways to start off our day is to always remember that each of us start off equal each day when it comes to our time bank. You see, each of us receive 86,400 seconds, and I am grateful that you're going to spend, well, 3,600 of those. Maybe some of you will spend 7,200 of those seconds with me. And my commitment to you is to provide you with all the best information that I possibly can. And we will go unlock the code of these markets. So for the next couple hours, we'll utilize our lightning bolt pattern. That's our A to B equals CD tool. We'll take a look at Fibonacci expansions and retracements. The combination of those two are what create our Gertlian butterfly patterns. We'll take a look at our TAS market profiles, the Rhodes momentum trading signals. We'll look at Chapman waves. We will use everything we can to help us identify where levels of support and resistance are. And remember, this is an interactive show. That means that we absolutely would love to hear from you. You just got to pick up that phone, dial us at 877-927-6648. Speed dial us, in fact. And then, of course, you can reach us internationally at 727-445-1044. Then together, you and I, we can go hunting for bulls and bears out there. It is Terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow futures. They're trading down 31 points, trading out at 16,709. S&P futures off a couple points, as well as the NASDAQ. Russell 2000 is flat. King dollar back about 296 ticks. So we're going to go take a look at the currency market, see what we have going on out here. That's probably our first course of action. This morning we had Super Mario Draghi. He was out, didn't really provide a whole lot of information, so we're going to go see how the euro's trading, how the yen is trading, how the pound is trading, and anything else that you like. Goldilocks back a buck right now. She's trading at 12.14.30. Silver off 18 cents, trading at 17.07. Light sweet crude down a $1.27 right now. That's trading out at 89.47. A quick peek across the globe. Let's go see how Oktoberfest is working over in Germany right now. You got the DAX off 44 points. It's trading at 93.36. The FTSE down 29, trade at 65.27. The Nikkei, the only of the three that we track over in Asia, the Nikkei down 420 points last night. They did not like the handoff that our markets gave to them. But let's first go take a look at the currency market out here. Let's go take a look at the euro, trading right now at about the 1.266 level. What is that I see on my chart out here? Oh, my goodness. Is that, in fact, a bullish reversal signal? Really close to a bull separating candle. It does look bullish as we speak right now. Now, you get a Morningstar reversal signal here. If, in fact, well, you're probably pretty close to it as we speak right now. In fact, I would have to say that you are. Of course, you really get a reversal signal if you get above the open from September 30th. So that open is 1.2695. We'll go down into an intraday chart here. Let's do that again. Let's do that right now. Take a look at a 30-minute time period. And this is really what we want to be able to take a look at because, you know, could be oversold. Let's see. Let's take a look at the 30-minute time frame out here. Let's see what the pattern is that is completing as we speak right now. So let's look at the A to B equals CD pattern. We're looking at the euro. I'm taking a look at the euro futures product out here right now. And if I take a look at my A point, it's going to be from September 30th. That's at a low out here at 1.2578. That's my A point. My B point in the in this move out here, it's a whole cluster of candles right around the September 30th level at around 1:30 or so in the afternoon. Was that the morning? That could have been the morning. No, that was the afternoon. And then the actual C point Again, a 30-minute chart, so 8:30 on October the 1st. So what we can see here is that we got up just above the 1.272 level, and then we made our first retracement. Now, that's kind of a key here. If we take a look at that first retracement as we take a look at the euro, we're going to look at the retracement. You can take a look at two retracements. We can take a look at the entire pattern. Let's do that first, the entire A to B equals CD pattern here. So I'm going to go from the A point all the way up to the completion of that first move up. And what we will see is that the 0.618 retracement level was 1.2618. The actual retracement inside of the euro, we've seen that level get hit, looks like maybe twice, 1.2620. You got to love that. And then, as Super Mario came out with his news out there, we saw the low get down to 1.2621. So that 0.618 level is very important. So now what we've got setting up here is the next A to B equals CD to the upside. And that's what you need to see if you're going to start to see a change in trend take place. You start to see A to B equals CD patterns that start completing to the upside. So let's go take a look at that. Let's go take a look at where the next A to B equals CD pattern is, so that you can note this. And for those of you that are trading in the Nadex platform, and during the break, I'll pull up my screen that shows the winners from yesterday out there. But one might want to investigate the currency market out here. It's a great way to trade the Nadex platform. If we take a look at our next A to B equals CD pattern, what we ought to do is start off down here back at about 8:30 in the morning. That's on October the 1st. And that's at a, well, I'll give you the low in a moment. Our B point's going to be this high that came in at 11:30 last night, October the 1st. October the 1st. And then our C point's going to be, we'll use as the correct one to use is right down here at about 3:30 October the 2nd. So what we can see here is the euro. It's on its way in the futures up to the let me give you a mark, 1.2711. I'd have to say more likely it's going to do a 1 to 1.272. That'll take you up to about the 1.2736 level. So that is a trade that I would be looking at as you take a look at the euro. So now let's go back to the daily chart out here as we take a look at the daily chart inside the currency pair. Now, what does this mean? Because the euro is got the largest weighting structure inside of the U.S. dollar index, that means that the U.S. dollar index has likely now put in a top out there. And that's a real good guidance with regard to what goes on inside of the commodity sector out here. So today, from a daily standpoint out here, when we come back tomorrow, what you're going to want to see, and then we'll put a couple different things out here when we take a look at the daily charts. So let me pull this. Let me actually get rid of a couple of things out here. Let me click on that, delete that screen. That looks pretty weird, doesn't it? Can't really provide you with much here. We're going to also take a look at the daily chart and come up with some longer-term trends out here. So we're seeing the reversal. And remember, my belief here, just as I believe we're forming a bottom, although we'll talk about that in a bit out here, because yesterday's action, unfortunately, didn't give the signals that I was looking for out there. So we got the big chop, but we didn't get it wasn't a big enough chop. Believe it or not. But there's really a couple different patterns that we're looking at here. So right now we're just focused on the euro, and we're focused on the euro because of its impact on the U.S. dollar index and then its impact in the commodity sector out here. So other places to take a look at inside of the euro for this change in trend. So look, if you're short the euro, I guess the message, the message I'm giving you is make sure you've got a stop in place. Like it's early in this trading session, but on that 30-minute in the 30-minute bars, we've seen the first A to B equals C to the upside. We saw a natural retracement back into the 0.618 level. We start to see A to B equals CD patterns on the intraday charts out here. Pretty good identification that we're going to see a bounce here inside of the euro. If we just take a look at that, and I'm going to come from the May 8th session down to, well, I was going to try to do that, but it looks like something is messed up here. Well, let's see if Stevie can just change this style template real quickly, repopulate it, and I must have hit the wrong key somewhere along the line. So let's give this another shot out here. We're going to go from that high on May the 8th. There we go. Now we got it working. Down to the low on September 30th. The euro easily could bounce to the 1.311 level out there, and that'll be a big bounce. That'll be significant. Do I think it can bounce more than that? Can it trade more than that? Yeah, absolutely. I believe that it will trade more than just a 0.382 bounce out here. What other tool can we apply to get an idea whether or not when a change in trend would take place? Hey, how about just simply a trend tool? If we go from that May 8th high and we pull the trend line down, really, let's do this as a channel. Well, there's the trend line that's drawn in there, and it looks like that says that we would identify a change in trend also somewhere right around the 1.311 level, just using a trend-based tool. We'll just stick with that. So that next key level to be watching, first, you want to see A to B equals CD patterns continue to move to the upside out here, and then you'll want to watch and see what happens. Now, folks, the folks will get off of and it'll be a heck of a short covering rally too, right? So what are reasons why the euro could bounce out here into the 1.345 level? Well, the sphincter muscle of those that are short the euro could really tighten up, and especially if you don't have stops in place, because that's a nasty thing when you are trading the currency market out here. So the 30-minute chart, just to reiterate, is giving you a first A to B equals CD pattern with the right retracement. The daily chart is trying to form a nice bullish reversal signal. We'll see how that works out at the end of the trading session, so we'll take a look at that tomorrow on Fantastic Friday. But that's what that is looking like as we speak right now. If we go take a look at the Japanese yen, U.S. dollar, Japanese yen out here, that gave us a reversal signal yesterday. What was that reversal signal? Well, it was a key reversal signal out here. As you know, if you've been listening to the show, we've been taking a look at 1 to 2 A to B equals CD to the upside that had formed in here. The A point was this little hammer candle. That took place on August the 8th. That was your A point. Your B point was out here on August the 25th. Makes a retracement. What kind of retracement? A shallow Hal retracement out there. How many of you remember that movie? And that was down at about a 30% retracement. Makes a 1 to 2. I've got to find out. I've got to open up my book on timing the trade out there and see what page it says. When you do a 1 to 2 A to B equals C to the upside, you're typically going to do something else. Well, you got your key reversal in the Japanese yen yesterday. It pulls back. That means it's getting stronger, and the U.S. dollar index getting weaker. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and hey, congratulations. We've got winners out here. Yesterday's daily winners, P. Lounsbury, H. Gamboa, M. Hyman, H. Shell, and T. Johnson. But how about this? We've got a horse race, folks. In first place, we got S. Nijar, $40,000, for almost $41,000 in profit after, 3 days worth of trading in our virtual trading competition out there. In second place, C. Norwood, $31,000. H. Yip, up $20,000. G. Ziegler, up 19. J. Creamy, and I'm going to say the Z maybe is not pronounced there, and if I mispronounce that, my apology. But you can give me the call in the show, and you can teach me how to pronounce your last name out there. I'd like to do that. I don't want to make an error in that. Names are special. 15,800, so that's pretty special, too. We got Jay Skoronsky, 15,000 in profit. A. Pierce, over 12 grand there. R. Fady, 11.9. K. Kozlov, up 10 grand. And A. Klein, up $8,000 out there. Make sure you place your trades today. One of those trades you might want to take a look at could be in the currency market, could be in the euro out here. Let's go back to we were looking at the Japanese yen, so let's go take a look at that again. Yesterday, it had, and I pulled out my book. I can't find the original book that I've got, but inside the Art of Timing the Trade, and many of you winners are getting that book, so that's wonderful. But I went to just looked in the index real quickly here, and I believe it starts on page 49. But I just flipped through real quickly. I couldn't find where it talks about the 1 to 2 A to B equals CD to the upside out there. Nonetheless, what you should know is when a market does that, it can get beyond that. Absolutely. It can go to the 2.618 expansion or even the 3.14 level, which is really what the U.S. dollar index did. It went up to pi. It was pi in the sky when we take a look at the U.S. dollar index. So nonetheless, we've got the Japanese yen. Gave you a key reversal session, bearish engulfing candle, engulfed the prior two candles out there. You're seeing some follow through to the downside out here. So that says we should begin to see some kind of retracement inside of the yen. If we just take a look at the A to B equals CD leg here that it completed, its dead cat bounce would take it down into about the 106.81 level out there. Again, on this chart here, when you see the yen pulling back, it's actually the yen getting stronger against the U.S. dollar index. That means the U.S. dollar index would be getting weaker. So now you've got the euro and the yen that seem to be in formation to go ahead and watch the U.S. dollar index pull back. And it's going to be extraordinary. It's going to be large, in my opinion, out there as we watch that pullback continue. Of course, you've got the Canadian dollar. We've got the you've got the Great British Pound out here. Let's see what the Great British Pound is doing. I believe that has been in the process here of forming A to B equals CD patterns as well. Yeah, the retracement here looks like now it's headed back to the 0.786 level. So the pound out here, Let me see. It's right at the 0.786 level. So it's do or die for the pound right here at the 1.6153-ish level. You're trading 1.6156 as we speak right now. If it can reverse course here, then that would set up your A to B equals CD to the upside. You know, if we take a look at the U.S. dollar index, just to give you an idea for the slice of pie that it has formed, if you take a look at its A point out here, if you're watching us on TigerTV, thanks so much for doing that. If you take a look at and if you're listening on the radio, we appreciate that as well, or maybe it's TFNN.mobi. Don't forget the archive of this show is on channel 9, 9 a.m., 9, channel 9 for the archive out here. If you take a look at the 8 point, that took place on May the 8th, out at 78.93, makes a move up into this June 5th high out at about 81.06, pulls back, does about a 0.618 retracement. That was on July 1st, and then it was off to the races, 1 to 3.14 pi. That would have given us a price projection of 86.47, just a little outside, just missed it slightly when it got up to the price of 86.33 out there. Nonetheless, just as we took a look at the Morning Star candle on the euro, you can see here we've got the Evening Star version on King Dollar out here. If it can get below the 85.24, then I'm a believer. Who sang that? Was that Mickey Dolan? I am a believer. In any event, I'd be a believer here in the move lower inside of the U.S. dollar index. So we'll continue to see how this trades. That's a daily chart. Needs confirmation just as the euro, the monkey. Thank you. And so you've got the U.S. dollar index pulling back. What does that mean? Well, that means that what we ought to see Goldilocks and silver begin their takeoff. So I think that I think they're on the launching pad. If I look out the window and I get out my binoculars, I can see they're wheeling Goldilocks out of the VAB, that vehicle assembly building. That means they're going to go ahead and fuel it out there. And once that ignition goes off, folks, it'll be a strong liftoff. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow off 2 points right now. S&P is flat. Composite up 1. Russell 2000 is flat out here. DAX off 60 points. FTSE down 33. Lead the charge, the upside. You've got Tesla, TSLA, up about $11, up 5% right now. Esperion, ESP, ESPR is the ticker symbol. It's up $4.50, up 18%. We'll take a look at that. Canadian Pacific Realty, that's up 2%. Riald, RLD is the ticker symbol, up 25% this morning. Kihu 360 Technologies up 5%. Autodesk, ADSK, that's up 4%. Cummins, CMI, up about 2.5%. McCormick and Company, MKC, up $1.15. Solar City up 2%, up $1. DirecTV off 91 cents as well. Those are the leaders in the clubhouse to the upside. Leaders to the downside out here, we got CREE, CREE, down $5 off 14%. GoPro having a difficult morning, although that stock has taken off to the moon out here. GPRO off 5%, down $5. Vertex Pharmaceuticals, VRTX, off a couple of bucks. Agrium, AGU, off a couple dollars. U.S. Silca Holdings, they sell sand, and they sell a lot of it. It's down $1 right now. You got WebMD off $1.56. Amazon down $1.35. Constellation Brands, those are the folks that distribute that wonderful beer called Stella. STZ is the ticker symbol. That's off 2%, down $1.80. Visa off $1.39. Apache Corp down $1.20 out here. Okay, let's go take a look at an important area here inside the Dow futures. Let's look at the 120-minute time frame chart out here, because there was a hammer candle. It's been under attack here this morning. If we take a look at that 120-minute time frame chart out here, let me get rid of a couple of things on the chart here. I haven't updated this for a while, so let's get rid of some of the trash if I can. There we go. All right, and let's just take a look at the hammer candle. Whoops. That's what we're going to really focus on here. So if we take a look at the Dow futures, this is what we're looking at. This is a 120-minute time frame here. What you will see is at 6 a.m. this morning, there was a nice little hammer candle that formed. There was this hammer candle that formed at midnight as well, but not a lot of volume, not a lot of trading going on. We'll take a look at the one at 6 a.m., though. So you had a hammer candle that formed right at the bottom of its TAS market profile out there at the 16,719. We saw, as the market was opening, we saw the market push down and test that low. By the way, the low of that hammer candle, it's 16,694. There's a reason that we're going to take a look at this hammer candle as well. We need to. We got to. You want me on that wall. Well, if we take a look at the, how's that for my Jack Nichols? I got to really work on that that one. Another great movie out there. Now, if we take a look at that hammer candle, that's a very important level of support out here. You break below that, you know the expression. If you're long, you're wrong out here. At this stage, that has held. If you take a look at the 120-minute time frame chart out here, you take a look at its TAS market profile. For me, this is more of a bullish and bearish confirmation. So it's bullish to neutral. But the real key is going to be whether or not we see the Dow close below that level of 16,694. To the upside, what's the potential out here on any kind of move higher? You'd have to say, first, you've got to clear the 13-period exponential moving average on it. That's 16,768. 16,778 happens to be the point of control. So you really need to see price get above that level. 16,778 is what we'll call it. So if this hammer holds, you see price move above that area, it'll trade into it. The question is going to be, are the sellers just camped out and waiting right there? If they're not, and you start to see price get above that level, then your mark is 16,866. Again, that is a 2-hour chart that we are looking at, and that is an important candle session for us to watch out here. So at this stage, you'd have to say 16,778, that is likely to get above that. 16,866 becomes the number. And we're taking a look at the Dow futures. We could go take a look at all of them, quite frankly. I don't think, there was a hammer candle also that formed on the NASDAQ out here as well. Let's go ahead and put that 120-minute chart on the screen. Let me pull this back just away. That hammer candle, that was at 6 a.m. as well. And then after that, we saw a little bullish engulfing candle. Now, all of that coming at the bottom of the 2-hour chart using the TAS market profiles, that being 39.74. So that says, okay, intercession at least. We've got a decent bottom that has formed out here. That says that where price is going to struggle a little bit is going to be at 39.89. If you can clear that 39.89 level, then your next point to be paying attention to and watching is going to be 4,013. You start to get above 4,013, then you start to see a shift in who has control of the marketplace out here, potentially. But those are the areas to be watching as we speak right now. So you've got a bottom here on an intraday time period where the bulls have decided to defend their territory, so to speak. So why is that hammer candle so important? Well, for all of you that know that I'm calling for a market bottom, a significant market bottom. Yesterday was not, believe it, price destruction extraordinaire. No question about it. It was right out of the chute. It was the good old FSU chop, and it was chop away all day long. And one would have expected, I would have expected with that kind of chop, that what we would have seen out here was we would have seen a move with volume to the downside, and we did not get it. If we go take a look at the QQQ ETF, because, we use that as the wind at our back. We use that. Come on, populate for me, would you? Son of a gun. Why is that not? What the heck has it got to resolve out here? What did I do? What did I do? Oh, I don't like that. Stop the script. No. Because when I click on that, it does nothing. That's like my system has frozen. Like the Disney movie, like somebody's put a frozen spell on me. I hope that wasn't you out there. It's going to make things. Let me look at my CPU and see what's going on here. Nah, no problem there. So that's so weird. But yeah, I've got data that's coming, so we're just have to switch gears. That's all. Let me see if it will let me do something else. Oh man, it won't. Well, I'm going to just reboot it. When in doubt, just simply reboot. But I can go to some other charts out here, so let's go do that. What I need to do is switch to a couple of tabs out here. So give me a moment to do that. We'll put up some different tabs. There, it seems like it resolved itself. How about that? Well, now it's probably going to go ahead and close down. Yep, there's the close down. My apologies. You got to love it during live TV, but I do have backup, so that's a beautiful thing. But let me go ahead and start this thing anyway. So let's go take a look at. All right, let's go take a look at Goldilocks. Let's go see what we've got going on inside of Goldilocks at the moment while my system gets underway. If we take a look at gold here, this is a daily chart here for gold. And if you're watching us on Tiger TV, one of the things that you are seeing here is you're seeing a descending price channel that has been in place. Let me get my cursor out here. It's a descending price channel that's been in place since March of 2014. So it's a daily chart that we're taking a look at. The bottom of the consolidation, the bottom of this descending price channel, I drew this in here weeks ago. I drew in that price channel out here. And what's so interesting is that the price of gold has just simply continued to move down into the bottom of that price channel, and it has held. So I'd say that the price channel that I've got drawn here is PDG. It is pretty darn good. So what did we see take place in the case of gold here? We go back to the September 19th move down, which hit the bottom of that descending price channel. And we go to the low down there was at 12.14.20. What gold did here on September the 30th was it made a lower low, and it did it with less what? Less relative weakness out here. Also, at the same time that it was doing that, it got down to a fourth wave in our Chapman wave count there, oftentimes a place where you can begin to see a reversal. So we know price in the case of Goldilocks is pushed down into a descending price channel that is contained price. It is held. We almost got a key reversal session here yesterday, but no cigar. What we did get was we got a bullish engulfing bull sash style candle yesterday, and that says if you get some additional follow through to the upside, you can begin to see a change in trend, just like we took a look at when we looked at the euro, the U.S. dollar index, the Japanese yen out here. So additional moves to the upside, it doesn't have to be spectacular. You'd like it to be spectacular. Would say we've got a chance for a bottom to be put in. From a Rhodes momentum trading indicator, if you're watching us on Tiger TV, what you really need to see gold do in order to change its trend from bearish, which is what it's in right now, to bullish, where the rubber band gets stretched so much that it begins to reverse, you need to see it close above the candle session from September 19th. So that's really your key number out here. That high is 12.29.20. So there's some work that needs to be done inside Goldilocks. You get above that, then that says that price ought to at least start making a run for the top of that price channel. That's somewhere in the 1290, 1300 range or so. So we also have some signals out here of Goldilocks trying to form a bottom, all kind of lining up with what's going on in the euro, all kind of lining up with what's going on inside of the U.S. dollar index. Funny how that works. Now let's come back to the Qs out here. There we go. And let's get our Qs. If we take a look at the QQQ ETF, we take a look at retracements here. The retracements that I'm looking at are coming from the August 6th, August 7th low out here, all the way to the high that was put in on September 19th. What we know about the QQQ ETF is that it's down below the 0.382 retracement. That number was 98.03. Made a move down. It had some accelerated volume yesterday, 58 million shares, but that's nothing. That's not the type of volume that I wanted to see. Doesn't mean I'm going to get it, but that's not the type of volume that I wanted to see that at a bottom, to put it in a nice exhaustion move to the bottom. We can take this Q chart back so far, and we're going to see all kinds of lows that are formed out here with high volume. You can take April 15th as an example, 84 million shares. And with a move like yesterday, the type of move that we saw, especially coming after a move here like Thursday. Now, one has to say, why wasn't there as much volume on that move on Thursday? So if I'm sitting here saying to myself, why couldn't they get enough volume moving to the downside after Thursday's move, which had 68 million shares out there? And yesterday really should have had it. So I'm a little on the fence here, a little on the fence and waiting for a lot more information to come in. It's not the type of volume I want to see associated with the nice fireworks extraordinaire fireworks. What do you call it at the end? Oh, come on, geez Louise. Oh, well, you know what I'm talking about out there. And certainly no reversal signal out here. We saw that take place back on April the 15th out here. So the bottom that I was looking for, not in just yet. Grand finale. Thank you, KJS. That's all I needed was just a little signal. It was on the tip of my tongue out here. And, of course, the volume, if we take a look at the last lows back in August the 5th, you had 50 million shares, which was followed up with 60 million shares. Then that 60 million was on August the 1st. So, there is a possibility out here. We'll just have to wait. That candle formation will help us to identify whether or not there's a trend change in place. I say more likely than not. Today becomes a little pause, refresher, maybe a little bit of a bounce or something along those lines. And then we see a push down into that 0.618 level, 96.46. Hey, it can push even lower than that. The problem here with regard to the Qs as well as all of the ETF structures is there's no real floors out here that have been built along this move up. It was just really one straight line move on the way up. And so that's what's going on inside of the Qs. So we've covered Goldilocks. We've covered the currencies. We've covered the Qs. Let's go cover some things that are moving and grooving out here. We covered the hammer candles. We didn't cover one of the hammer candles. I knew I was going somewhere out there with this, and that was taking a look at the IWM. So let's go take a look at the IWM, because when we take a look at what took place here yesterday inside of this ETF structure, which we know has been in a 13-point consolidation range, the index 130-point consolidation range from 107 to 120, and change out here. What the IWM did yesterday, it did have the volume. Unfortunately, it was the opposite way that I wanted to see all this go ahead and take place. And that was moved down with 88 million shares yesterday and tested what? It tested a hammer candle. So just like we were taking a look at the 120-minute chart for the Dow futures, the bottom of that May 15th, the low of that May 15th hammer candle, 107.44. The actual low yesterday was 107.43. Did it by a penny. You got to love that. So you got that test, rejected it. Unfortunately, the rejection was on heavier volume. Even if I come back to the trading session here, that also marks the bottom of that consolidation pattern on February 5th. That had volume of 60 million. So again, you had 60 million, and yesterday was 88 million. You're coming down with too much volume. But nonetheless, that hammer low is very important out here. So the Russell 2000 should be the one that gives us the piece of information. Now, you get a big reversal signal out here. Doesn't need to go back down and test that area because you just traded back down into the bottom of a significant consolidation. On the other hand, no reversal signal. It says we ought to go down and test that area. Remember, a close below a hammer. What's that expression? That's right. If you're long, you're wrong out here. So that says that 107.44 level is really important, because we know we've got a 13-point consolidation pattern inside of the IWM. And it says if you close below that, you close below a hammer, you do it with volume. It says you've got a measured move of 13 points to the downside. That says that you ought to go down to 94 or so. And where are we at the 94 price point? Where does that take it to? Price point there takes you back to June or so of 2013 out there. So that's the potential downside out here, and it is likely going to be that hammer candle that's so important inside Russell 2000, which is at the bottom of that consolidation. Right now, we got the Dow. She's traded off 17 points. Otherwise, yes, it is flat, positive 6. Russell.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Flat in the Dow, but it is Russell 2000 that is taken off to the moon here, up by 7 points. And we have our next winner out here. How about that, folks? We got on the line with us. We got Ramiro Diaz. Ramiro, did I pronounce your name properly?
That's correct, yes.
Hey, congratulations.
Thank you very much. I really appreciate it.
It's a nice way to start your day. You get a nice crisp $100 bill in your pocket, and the art of timing the trade, your ultimate trading mastery system out there. Thanks so much for participating in our contest. How long have you been a listener here? How long have you been checked into the Hotel California?
Well, actually, I participated last year in the contest as well.
Oh, great!
And I do look forward to receiving the prize and the book, The Art of Timing the Trade.
Absolutely. Now, how are you doing this year? How are you doing in this year's contest?
Well, it's looking good, and it just depends on tomorrow, and I hope there's volatility tomorrow.
Okay, yeah, good. So you got some nice trades on today?
Yes.
That's excellent, excellent. And how long have you been a listener here at TFNN?
Basically, throughout since I started last year, I do check in.
Okay, great.
Once in a while.
That's great. Well, look, you're going to get a great book, The Art of Timing the Trade, and we really appreciate your support and listening in and participating in the contest. And I wish you the best of luck in your trading today and tomorrow, as well as every single day in the future. So thanks for being a Tiger.
Thank you very much. I really appreciate it.
You bet. Have a great day. That was our latest winner, folks. Make sure you get your trades placed out there, because we got 4 more on the way. 4 more that are going to go home today with a nice, crisp $100 bill, and, of course, the art of timing the trade out there. So right now, Dow's off 10 points. S&P is flat. The composite's up 7. Russell's up 6 points as we speak right now. Gold's back $2. Silver off 25 pennies out here. The euro, let's go back and just take a quick peek at the euro, see what it is doing. We'll take a look at stocks that are popping and dropping during the next show out here. So real key inside of the euro, key for the dollar, in my opinion, key for gold and silver out here is going to be the euro closing above the open from that trading session from September the 30th. And that price point is 1.27 what was the open? 1.26878 out there. You see a close above that. Well, you don't really need a close above that in order to get your morning star pattern out here. You just need it to be halfway inside the body, which is what we've got right now. But, you really like to see some kind of conviction coming off of the bottom, and that would just simply provide us with more conviction out there. And that, in my opinion, is one of the areas that you really want to focus on, not just for the Nadex trading platform out here, but for just the overall market and what it is doing out there. So to the downside, the biggest mover to the downside out here is CREE, C-R-E-E, the LED, I believe it's the LED light manufacturer out here, and this thing is down with some pretty big volume so far this morning. Only been trading for 27 minutes, but it's down with 3 million. It's not its first sign of weakness out here. That took place on August the 13th. So we'll take a look at Cree, GoPro, Salix Pharmaceuticals, Tesla, Lithia, Asbury Automotive, and a number of other equities during the next show. So if you're off to start your day, thanks so much for joining us always. Don't forget to place your trades inside the Nadex platform out there. That way your name may be picked next out there. So have a great Thursday. I look forward to seeing you bright and early tomorrow morning, or perhaps in, I don't know, it takes about 10 minutes, so about 10 times 60, so about 600 seconds or so. Have a great Thursday, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.